Welcome back to the Investing Iguana. Today, we're diving into how greed and gullibility torpedoed billions of dollars from Singaporean investors, and what you need to do to protect your own portfolio from the next big trap. Ever had a sure win penny stock tip that's just too juicy to ignore? You're not alone, and the result can be painful. In this video, you'll get the inside story of Singapore's greatest stock market meltdown, the lessons nobody talks about, and my personal take on keeping your hard-earned money safe in the wild world of SG investing. By the way, the Investing Iguana was ranked 8th in Tiger Broker's 2024 Influential Tigers. We just hit 1 million reads and 58,000 likes. I've made over 1,000 videos with more than 600,000 watch hours. I break down not just local, but regional and global financial trends, so you always get context, not just headlines. This video is adapted from my latest in-depth Substack deep dive. Here's your roadmap. First, we'll break down why penny stock temptation is so powerful. Next, I'll reveal the anatomy of Singapore's biggest stock scam, walk you through the courtroom drama, and explain why smart investors got caught out. Then we explore how the SG market changed, and finish with my personal verdict, plus what you should do differently starting today. Let's begin with a classic scenario. Imagine your friend tells you about a tiny SGX stock set to fly to the moon. Some folks call it early retirement. Deep down, though, you wonder, can it really be this easy? The 2013 penny stock crash was built on that hope. Thousands of everyday Singaporeans fell for hype, chased the shortcut, and watched their portfolios go up in smoke. Maybe you've clicked those WhatsApp messages or read those posts on forums. It's embarrassing. Nobody likes to admit it. But trust me, it's more common than you think. Here's my take. Emotional decisions can beat even the pros. Penny stocks prey on our cravings for quick wins and belong, to feel like we're finally in on the secret. I'll be honest, if you ever feel secretly lucky about a tip, ask yourself, would you feel comfortable telling a room full of finance nerds the whole story? If not, you probably need to pause. Let's get to the nitty-gritty, the anatomy of this scam. The BAL stock saga, Bluemont, Asiocins, Liangold, wasn't just a bunch of no-name counters. In 2012 and 2013, these shares caught fire. It looked like institutional money was betting big. Prices skyrocketed. Everyone wanted in. Brokers, forums, media, your kopi shop, uncle. But behind the curtain, John So and Kwa Su Ling were pulling the strings, using borrowed money to generate artificial demand. For months, it worked. Hype begat hype. Liquidity begat even more liquidity. Then, October 2013, the music stopped. Trading froze, prices crashed, and more than 8 billion Singapore dollars of value evaporated almost overnight. Here's a quick picture for you. 3 counters, each losing more than 85% in a single week. Billions gone. If you want the hard numbers, what each stock traded at before and after the crash, how much wealth vanished, check the full table in the Substack post, link in the description. Here's my personal download. Don't ever let surging prices trick you into thinking a business is strong. Watch the fundamentals, not just the fireworks on your screen. If you ever find yourself counting on money already made in a run-up, it might be time to take profits or get out. What did the courts find? After years of digging, Singapore's Court of Appeal laid it all out. So and Kwa orchestrated the entire con using 189 accounts across 20 brokerages. They sent text commands, manipulated trades, and, when the heat rose, tried to blame everyone else. So even tampered with witnesses. End result, So 36 years in jail, 180 charges. Kwa, 20 years, 169 charges. The scale was breathtaking. If you map this out, you'd see not just 1 or 2, but nearly 200 accounts used to inflate 3 stocks across 20 institutions. We're talking about a fraud machine. This wasn't a simple pump and dump, it was industrial scale. If you notice unusual coordinated trading, or see insiders changing their tune or hiding trades, that's your signal to dig deeper or steer clear. Why did people fall for it? To be honest, nobody wakes up and wants to get scammed. So and Kwa built trust. They sounded like experts, dropped teasers to just the right groups, and let prices fly before tempting in the crowd. Then came the FOMO, fear of missing out. Everyone kept thinking, just this once, I'll be early. But in reality, someone else was always in earlier, setting the trap. Picture it. 4 triggers: price surges, whispered tips, forum buzz, and the lure of margin or leverage to make it big. Put these 4 in play, and even seasoned investors lose their discipline. Remember, even if the whole COPTM is talking about the same stock, it doesn't make it a good buy. Here's my challenge. Don't rely on others' conviction or reputations. Ask yourself, do you really know what's going on inside the business? Or are you just swept along by the crowd? Owning your own process protects you from getting caught up in hype. Let's talk about what changed. After the crash, MAS and SGX got serious. Circuit breakers got tougher. Suspicious trading is now flagged. There are tighter controls on margin and shorting. These policies help, but they can't protect you alone. Circuit breakers only pause the market. They don't reverse a bad bet. Think of it as a safety net, not a parachute. I say use the tools. Read company announcements, check official alerts, and don't stop learning. Trends and scams evolve as fast as TikTok trends, if not faster. Pause here. For full charts, checklists, and the written playbook, grab this post on Substack. The link's in the description. Here's my personal SG Focus playbook. Write your own investing rules. Stick to them, even when the market feels crazy. Don't get swept up by easy win stories from social media or forums. Always put business and transparency above buzz and excitement. Review your own holdings. If you're uncomfortable with the risk, act before emotion takes over. That's how you stay in the game over the long run. To bring this home, remember, don't get emotional. Don't get too invested in stories, no matter how tempting. Make skepticism your secret weapon, especially around small caps or stocks flying for no clear reason. If the basics, like sales, profits, or governance, don't justify the rise, it's likely a trap. Build your core portfolio with transparent, regulated firms and do an occasional spring cleaning to root out speculative danger before it grows. If you want to level up your investment game, don't fly solo. Join the investing Iguana community. Like, subscribe, and share this with someone who needs a shot of market reality. For exclusive charts, playbooks, and step-by-step breakdowns, become a premium Substack member today. Link below. By the way, for your next move, watch my deep dive on hidden risks in SGX small caps. It'll be the perfect follow-up to this video. Stay sharp, play the long game, and let's outsmart the market together.